So before I get started with the market update, I actually want to address the fact that I've not been sending out a lot of newsletters, or actually any newsletters, to folks that I was sending newsletters out to before. That doesn't mean that I wasn't doing real estate. It was just a reflection of the fact that I'd joined a new real estate team and have been conducting a lot of my communications through there. But I do want to pick those newsletters back up and keep them coming, as well as the market updates that I'm going to give you now. So that said, if you used to receive my newsletters, I'm coming up with a way of getting those back out to you. And I appreciate everyone that I've had conversations with, and I will figure out how to get those back out there on a very, very consistent basis. And as always, if you want to buy, sell, or invest in the DFW area, whether it be residential or commercial, please do reach out to me. Let's talk about jobs, and then we'll talk about the housing market. So for job seekers who have been restless about the stagnant economy, the February numbers, according to the Federal Reserve Bank of Dallas, are saying that there's starting to be a pickup in growth. And the Dallas Fed especially highlights, and they're saying AI investment, data center construction, and professional services. I think what actually happened is that in some industries, especially in tech, perhaps the job market got a little bit oversaturated, and then they corrected, and they are starting to figure out the proper headcount that they need to run businesses. Either way, I think it is going to spell good news for the DFW economy, and for folks that are looking to move here, to buy houses, to sell houses. I think it's going to start helping things pick up. Now, of course, we've got world events going on. I'm not the person to get into those world events, but yes, they are going on, and those do have an effect on the economy. And hopefully, I pray that stuff really does start to calm down and that things get back to normal worldwide. Supply still does remain the ultimate bottleneck. Inventory is still relatively tight, and if you're a seller, your leverage remains, I would say, higher than most places in the U.S. economy. And we are going to take a look at the entire MLS versus Tarrant County. But that's because building in the region may not be keeping up with demand. And as we know, that in some cases, the newer homes are suffering in quality. But I do hope that starts to ease up a little bit. And buyers, I think that you can start to anticipate a little bit of an ease up in financial conditions. And so while prices aren't expected to crash, they are expected to, like I said, ease up a little bit. Borrowing money is supposed to get a little bit easier. You can tell that because, or another key indicator of that is the mortgage rates. And I tend to keep track of mortgage rates every single day. And of note today, a 30-year FHA fixed on average is 5.68%. One of my favorite stats is that the mortgage rate over the last 40-ish years, the average was 7.42%. So we are actually below the 40-year average. So it is a good time to get into the housing market as far as that is concerned. And like I said, in the Dallas-Fort Worth area, home prices are not crashing. I think they're correcting. So this statistic that I'm going to get into is a little bit wonky. So I'm actually going to kind of read verbatim the notes that I've got here so that I can make sure to to get it out to you, to get it across to you succinctly. One of the most striking February data points is that DFW's average nominal hourly wages, approximately $37.70, continue to significantly outpace both the Texas and U.S. averages. Year over year, hourly earnings growth in DFW has hit roughly 6% compared to 3.8% nationally. The takeaway: DFW residents have more purchasing power. For buyers, this helps offset higher home prices. For job seekers, it means DFW remains a premium market where your labor is valued higher than in competing metros. So again, that's all very good news, economically speaking. So let's get into what the housing market is doing. In Tarrant County, home prices are actually holding pretty steady. Year over year, the change is about a 0.3% positive change. So home prices are going up just ever so slightly, which is actually what you want to see. And the median home price is $348,000. You don't want to see a crash. You don't want to see double-digit spikes, because that's not sustainable. And what the housing market needs is predictability. And that is a good indicator that things are things are a little bit more predictable these days. Value per square foot is flat. The cost per square foot in Tarrant County has experienced a 0.0% change over last year. Again, in a market that is starved for stability, that is a good sign. And homes in this area are selling faster than the regional average. So we're selling homes in DFW with about 47 days on market, whereas the regional average is 57. And inventory is tightening down, which is actually kind of a good thing, because too much inventory means that homes aren't selling, and too little inventory means that there aren't enough homes on the market. Tarrant County is at 3.4 months of inventory, which is actually kind of a good inventory. And it's also significantly lower than the 4.5 months of the broader MLS. And while home prices in Tarrant County have not crashed, still about $12,000 cheaper than the region. So you have cheaper home prices than the regional, and you've got a better job market than regional. It is a good time to be in the DFW housing market. So last but not least, I want to talk quickly about the commercial real estate market in DFW. And, there's kind of two tiers. There are the trophy assets, or the Class A assets. And we're talking about properties that are, selling or leasing around $60 to $80 per square foot. And if you don't know, that is, actually pretty pricey, but that reflects the premium quality of these specific spaces, and those are selling pretty well. Then we've got the other tier, which is kind of Class B and lower, and we're talking a little bit more about the commodity style offices that were built in the 80s, 90s. The prices, the absorption are falling for those. But the good news is that while it can be expensive to convert some of those, convert them you can. So if you are an investor or a business owner user, then you might start to target some of these Class B and lower commodity offices, because the prices that they're kind of falling to make it more palatable and more financially realistic to go in and convert those to the kind of office or the kind of space use that you're looking for. So you do want to start looking at the commercial market, and especially if you're a small business, this might be a better time. As always, I'm Dalton. Please do reach out to me if you need to buy, sell, or invest in the DFW area, or if you know someone else who does. I'm always ready to take on new clients. Thanks for watching. I've been Dalton. You've been great, and I'll see you next time.